Welcome to 1 Minute Crypto. I'm your host, Chronos, and today I want to talk about 3 things I've learned from looking at the Bitcoin block size over time. In this video, we're going to look at a chart from blockchain.info that shows the size of each block that miners have mined back to the beginning of Bitcoin, back to January of 2009, and it's up to date to the middle of 2018. So this is a real bird's eye view on how much transaction volume Bitcoin has processed over the course of its entire existence. And I've picked up a few things from looking at this chart, and I want to share them with you in this video. Today's episode is proudly sponsored by America's Card Room, the most trusted US online poker site. Be sure to use the bonus code Chronos when you make your account and you'll double your first deposit and get up to $50 in free cash. Deposit with your favorite cryptocurrencies at America's Card Room. So here's the chart, and the first lesson we can take away from it is that the block size is completely disconnected from the block size limit. You can see for years that the Bitcoin block size grew at a pretty exponential rate. It was growing pretty fast, especially during those middle years from 2011 to 2015 or so. But the block size limit during that time was 1 megabyte. So what we can learn from that is that the network doesn't necessarily fill up to its limit. When you're debating what the limit should be, some people assume that if the limit is X, then the blockchain will be full up to its brim at X. But it's clearly not the case looking at Bitcoin and looking at other blockchains because they don't necessarily operate at their limit. The next takeaway from this chart is you can see that the size of the blocks actually exceeded 1 megabyte there for a short time. That's because of the SegWit upgrade that was added to Bitcoin that allowed transactions to be kind of split so that some of it counted toward the block size and some of it didn't count quite the same. That's kind of the layman's explanation. So the takeaway from this chart is that SegWit was not highly adopted. And so even though SegWit was really heralded as the savior of block size problems, you can see people really aren't adopting it that quickly. So that's an interesting thing. I expected to see SegWit used a lot more than it has been so far. Doesn't mean it won't grow in the future, but today we can see that it's not affecting block size that much. And then the third takeaway here is that the block size actually has dropped down from the limit. You could see that congestion around 2017 where we were operating at 1 megabyte and we saw fees skyrocket as people competed to fit into those blocks. But now we see the size come down a little bit. And I think there's a couple reasons for that. First of all, Bitcoin is not the hot topic that it was 6 months ago or a year ago. Bitcoin was all over the media back then. Now it's a little bit quieter. Even though the price is much higher than it was a year ago, we can see if you just talk to people, it's not hyped up the way it has been in the past. This is kind of a quieter time, so I can understand that transactions are running a little bit lower as well. So because the blocks are no longer operating at their limits, the fees are a lot lower. They're now around 5 cents, maybe a little less, because people aren't competing for that tight block space anymore. So I want to know what you think about this chart. Are we going to see this shoot up past 1 megabyte and get stuck there like we did around 2017? Or do you think we're going to hang back for a while? I want to know what you think and what's going to happen to fees as well. So let us know in the comments below the video. I'm Chronos. Thanks for watching.